What's going on? If you're looking for a video explaining how the Robinhood prediction markets or the Robinhood event contracts work, this is the video for you. Right now, I'm going to jump into my Robinhood account. I just took out a pretty substantial deposit to pay my taxes, so that's why we have $18 in here. However, we can actually still utilize the $18 for the prediction markets or the event contracts feature that Robinhood just added. As I'm filming this video, we are shortly after the March Madness or the college basketball bracket has ended. And this kind of released just around that time where you were able to legitimately, and I tested it out, predict or bet on who would win games on the Robinhood app, like where I had my stocks. And I was like, this is crazy. There are other platforms, other apps out there that have this capability, but I thought it was kind of crazy that Robinhood also came out with it. It's like they're kind of trying to build this all-in-one encompassing futures, event contracts, investing, IRAs, day trade. Like they want everything, seemingly. So I'm going to jump down and you might see a notification come through on the homepage of event contracts. But if you don't see it, if you just scroll down on your app, you'll actually get to this section called prediction markets. And if you don't see it there, go up to the search bar. And in the search bar, start typing in prediction markets. And as I start typing in the prediction markets, you can see that we have the men's college basketball tournament, the women's college basketball tournament, and then the Fed funds rate in May. So it starts to give you some of those quick link options right there. I'm going to go back to the homepage. I'm going to scroll down to underneath stocks and ETFs where we see prediction markets. So we have the two options given right now, or if I click into that prediction markets, we're going to get a bunch of different options. And a lot of this is just financial news. But if you see or look down deeper, you'll see CPI, US gas prices, GDP growth, which is kind of where I feel a lot of the financial talk or media has been centered around, oh, are we going to have a recession? Are we going to have this? How bad is inflation going to be with the tariffs, etc.? So let's go to the Fed funds decision in May. So if I click on this, it now gives me a bunch of options and a bunch of lines. So these lines, think of these lines as how these options have been trading over time. Okay, and I can go back over the past week or even farther and see how they've traded over time. Now, the no change option is currently at 79 cents. We have a 25 cut for 17 cents and a greater than 25 cut for 4 cents. So there's a lot of ways to kind of do the exact same thing almost in a sense here, or do similar things. So I want to just explain what this means, how it works, and then put through an order to show you guys how it actually works. So I'm in the camp right now where I would kind of find myself with the majority thinking that we're probably not going to see a change in May. So I'm going to end up betting or selecting. I guess I shouldn't phrase it as betting. That's probably not how it's supposed to be phrased, but I'm going to choose that we're going to have no change. So if I was to go and do so, I select no change, or I can kind of modify my selections really quickly right here. And they do have more options. They have a hike option, which I think is not likely at all, but it's possible, I guess, right? Anything could happen. So if I click on no change, see what it says 79 cents, and then it goes down to yes, no. Now this is where if I click on yes, it'll see that the bid is trading at 79, the ask is at 81. So just like a stock, just like an option contract, there's a bid in the ask. I could put this at 80 cents, but for the sake of the video, to be honest with you, I want to make sure this gets filled or this gets entered right away so you can see how it looks. So I'm going to go right where I'm going to buy at the ask. And now if I was to go ahead and buy one contract, okay, this means I am going to be paying 81 cents times a 2 cent or added with an added 2 cent commission. So 83 cents. And if it is correct, meaning if there is no change to the Fed funds rate after the meeting on May 7th, okay, I will get paid $1. So I'm paying 81 cents, or in this case, 83 cents after fees, commissions. I'm paying 83 cents. And if it works, if it happens, I get $1 back. Okay, so I'm paying 83 to get $1. So in terms of 50-50 odds, or some could say better odds, it all depends on how you phrase it. You could say that if the payment or the price of my event contract was below 50 cents, then that is the lesser of the two likely scenarios to happen. Okay, so 81 cents means it's probably going to happen, but there's still opportunity to make money. So my downside, if wrong, is I lose 83 cents. If right, I make 17 cents. $1 minus 83 that I paid. And so it's like I put in 83 cents and I get $1 back is really what it is. If it works. If it doesn't work, I put in 83 cents and I get nothing back. So you could say, okay, well, is this the best way to play this game? You're the one to judge. You can create your own strategy around this, just like anything else, but it's like an interesting way to almost trade, just like a stock, a binary event. Like this is either going to happen or this is going to happen. Like boom, boom, and then whatever happens, you either get paid or you don't. Simple. Versus a stock, like, well, how high could it go? How high could it drop? You don't know. You can put a stop loss. You can put a take profit to kind of cap your reward, cap your risk, but you don't know. Maybe it would fall more. Like, so this is an interesting way to do this. So if I click on review, go ahead with it. It's going to, again, out of my account, it's going to take 83 cents. Boom, I bet no change, or I selected no change. It costed me 81 cents plus the 3 cents fee. So if this does happen, I get paid $1. Okay, very simple, very straightforward. So say I was expecting a cut. I go down to where we have cut, and I say, okay, I think we're going to get a cut. Yes or no. Now, again, same thing here. You can go and you can find the better odds. So if I don't think we're going to get a cut, meaning I think we're going to stay the same or get a hike, I could just say no cut. I could click on no. But now the bid and ask is 84 by 85, meaning it's going to cost me after commissions, if I buy one contract, it's going to cost me 87 cents to select no cut. Okay? And if it happens, I only get paid $1 back. So I only make 13 cents on my 83-cent investment. So from a risk-reward standpoint, that might not be worth it, but at the same time, the probability is higher. And if you were to go for a cut greater than 25, yes or no, you can select no, but that's going to cost you 97 cents. And if you go through the process here with the fees and commissions, it's actually going to cost you 99 cents, and you get paid $1 if we don't get a cut over the 25 basis points. So not really worth it. So I'm going to go back and I'm going to actually add to this. So see how it says now I have one yes. I'm going to actually buy more. So I'm actually going to buy, I don't know, let's buy 5 more. Okay. Bid ask, yeah, we're good on that. Submit, just like I would submit an order. Now we are done. Click on done. I'm going to go back to my account. I scroll to the top. You'll see that we're down a couple cents today in fees. Really, that's all it is. So if I scroll back down to prediction markets, click on that. It'll then show me where my position currently is, and I could buy more or close the position, which, by the way, you can do before the event. So if we get closer and closer to the event, and now the chance of no change goes to 85 cents, 95 cents, and it seems like we're pretty set in stone that we're not going to get a change in the Fed funds rate, what I could do is I can click on close, and let's say it was 95 cents. Well, after commissions, I can make a couple of cents and not have to hold through the actual event. So you could trade this just like you would a stock in a sense and not hold through the binary event if you don't want to. That is how the event contracts and the prediction markets work on Robinhood. If you have any questions, leave them in the comment section down below. If you're looking for videos diving deeper into the Robinhood Legend platform, I'll leave a playlist up on the screen right now. Thanks so much, guys, and I'll see you in the next one. Peace.